Hello students and welcome to the lecture. So students, as we know that we are covering the key national institutions, and in the previous lecture we had done with the Telecom Regulatory Authority of India, TRAI. Okay, I hope that you have revised all the facts and figures of the TRAI before you have come for this lecture. Okay, so basically in this lecture we are going to start with another important key national institution, which is not only important from the examination point of view but also important from various factors which we will discussing in this lecture. Okay, so with this note, let's start this lecture, and here we go. So now we are going to talk about the Reserve Bank of India. Why we should talk about it? Reserve Bank of India is basically important topic for the competitive exams because it is the banking authority with supreme nature. Okay, and you can say in short it is an apex banking institution. That's why it's become more important to learn about it. Okay, so let's start. But I think that we had forgotten our rule, full form, establishment year, then parent ministry. So if we talk about the full form, then basically RBI stands for the Reserve Bank of India. Reserve Bank of India. It's the first point. If we talk about the establishment year, then it was established on 1934. And if we talk about the parent ministry, thereafter, Ministry of Finance Affairs. It's its parent ministry, or you can say Ministry of Finance basically. Okay, so these are the basic details regarding the RBI. Reserve Bank of India, establishment year is 1934, parent ministry is Ministry of Finance. Now, let's have a discussion about the establishment of RBI. Okay, and it might be some long decisions because it is very important to know each and every fact about the RBI. Okay, so basically if we talk about the banking in India, it was a long developmental process. And why I am saying this? Because when we started to tracking back the banking records in India, then we had found a lot of things. But the main question is how to define these things were banking activities or not. Because if you are going to decide that these things were the banking activities and these things were not the banking activities, you can say, so you must be clear in your mind what you mean by the banking activities. So now we had found a new question. What do you mean by the banking activities? So if I'm asking you, what is the meaning of bank? What is the meaning of bank? And what do you mean by banking activities? Banking activities. Then how will you answer? Tell me. If not, then I am tell you, but listen it carefully then. Okay. So basically, if we talk about the bank, then bank is a platform where one can deposit his money and could borrow a loan whenever required on some specific terms and conditions. Okay, so if we look at the general function of bank, we will find out it's just a platform where you can go and submit your money. Like suppose you are the person, this one, okay, you only having expenses of rupees 100, but now you having rupees 150. So it means that 50 rupees is more with you. So where you should spend this 50 rupees? Suppose you go to the place and then you submitted your rupees 50 to that place. So that place is the bank. Okay. And then bank will give you the interest per annum at fixed rate. Like 1.5%. It is very, very low. Okay. 8.5%, 7.5%, and whatever will be the terms and conditions of deposit. Okay, this section we will cover when we will talking about the banking in the upcoming lectures. Till then, just remember that's how the deposit function works. Okay, after deposit, if we talk about the loans, like mostly people in India and somewhere else using the banking facilities for loans. Okay, they could borrow the loan on specific condition, as I have told you. Like if you are borrowing a loan for 10,000 rupees for 10 months, okay, then you have to pay some interest on it, like 7.5% and all. And this interest will be on simple interest and compound interest. Okay, so that's how the bank functions. Why I'm not telling you this? Let me very clear with you, because it's your maths part. You will get the idea of it in the math section. Here I'm going to tell you about some basic things like how the banks works. Okay, this is the bank, and the banking activities are basically accepting deposits, giving a demand drafts. And if we talk about the modern terms like the investments, you must have listened in the news that this bank had invested this much of money in this and all. Okay, time deposits. There are two types of deposits: time deposit and saving deposit. Current deposit also there, capital deposit also there. So this is all about the banking system. We will talk about it in the upcoming lectures. Now I think that you have become somewhat clear in your mind what do you mean by the bank. Okay, so when we started tracing back the activities held in India, then we identify banking activities were actually started during ancient times. Okay, and if we talk about the specific condition, during the Indus Valley, we had somewhat of banking activities. And now you will say how? Because suppose there are two organizations or civilizations, you can say Mesopotamia and Indus Valley. Now they had two persons, one person, another person. They want to do the trade with themselves. Okay, now this person could borrow some money in form of items, because on that time there was no trust of the money system. There was a barter system, items, and then he could deal with this person. So taking the items is basically taking like a loan, because he has to borrow the item from someone. Okay, and whatever he will get by trading with him, he has to pay the certain amount back to the person from whom he had borrowed that thing. He had borrow that thing. I hope that you are understanding what I'm trying to say. Suppose if you want to do a trade with that guy, and that guy said, I want this and that thing, but you do not have that thing. Then you borrowed the thing from someone on a condition that you will give some amount or something back to him in return after trading. Then after obtaining the thing, you again went to the person, get the thing from him, come back to your place, discharge your promise to that person from whom you borrowed. Okay, so that's how the bank function. Like if you want some rupees, you could go to the bank, take out the loan and promise interest, time period within which you will receive, you will return the money. Okay, and then you use that money for your purposes and you fulfill your promise after some time. Okay, so now you could understand from the Indus Valley, we are practicing the banking activities, but not in the proper sense or in the modern sense, you can say. Not in the proper sense and modern sense. Alright, now here comes the Britishers, or you can say starting with the Europeans first. As we know, when the Europeans started trading with India, okay, there were a lot of changes in the Indian economy. Okay, and when the Britishers begin, they completely transformed barter Indian economy into money-based Indian economy. Alright, so the Britishers were eagerly trying to change the barter Indian economy into the money transferred Indian economy, and that's why they announced to collect taxes in cash from the people, from the traders and from the farmers. Okay, because prior to them, the rulers and the zamindars who had the control over the people and who were collecting the taxes from the people, they collected the taxes even on the agricultural produce. Because we had the barter system. But when the Britishers started to rule in India, they said no, we will not accept any agricultural produce. We only want cash. That's why the people had to move towards money lenders and borrowed money with harsh conditions. Okay, because they had to pay the taxes to the British government in the cash. This thing led to the so many violent protests against the government. Why? Because the conditions on which they borrowed money from the money lenders were not in their favor, and even the conditions were harsh. That's why there was a strong reaction towards the British, and even the British government felt that they had to do something to resolve this issue as soon as possible. Okay, but the Britishers were not the one who started the banks in India. Let me tell you very clear. Okay, before them there were many banks established in India, like Bank of Hindustan. Okay, we have Punjab Bank, which is now known as the Punjab National Bank. Okay, and thereafter your Orient Bank Services. Okay, Odd Commercial Bank. So many banks were established in India, but they all could not sustain to last longer. They started, but they closed down soon, except the Punjab National Bank and Oriental Bank Services. These are some banks who survived, but mostly banks got closed. Okay, so thereafter the British government interfered in the banking sector, and they first established Bank of Bengal or Bank of Kolkata, you can say. They introduced the Bank of Kolkata in India. Okay, thereafter they introduced Bank of Bombay in Madras. Bank of Bombay and Bank of Madras. Now, one thing you can see which is common with them is that they all are the presidential banks. Like, you know, the British having three presidencies: Bengal Presidency, Bombay Presidency, and Madras Presidency. Okay, so the banks they established mostly concentrated with these presidencies. Okay, and that was not enough, because while the Britishers were ruling and introducing the banking system, there was a threat of other European powers to interfere in the Indian economy. Because on that time, Britishers were not the one who ruling the country. Like we had the Portuguese, we had the French, we had the Danish. Three other prominent European powers were also there in India, and they were trying to enter in the Indian banking system. Okay, and it was a time when the Britishers only focusing on the presidential system. Like Bengal, Bombay, and Madras presidency got their respective banks: Bank of Kolkata, Bank of Bombay, Bank of Madras. Then they feel that they should establish some other bank, and that's why in 1921 they decided to merge all the banks of presidencies like Bank of Bengal, Bank of Bombay, and Bank of Madras. They merged all the banks and formed one single bank, which is known as Imperial Bank of India. Okay, so remember, the Imperial Bank of India was established in 1921 after merger of Bank of Bengal, Bank of Bombay, and Bank of Madras. These banks belong to presidencies. Okay, now let's move forward. So what's about the RBI? How does RBI form? Because all the factors we have discussed so far are basically history related. But the question is how RBI was formed and why RBI was formed. Two questions have there. So first thing is that when the Britishers formed the Imperial Bank of India, basically it was not the centralized bank. Remember this thing. not the centralized bank, because it was only the merger of all the three presidencies, okay, to utilize their resources and funds all together. Okay, it was not established because they have to do some centralized bank activities. Like you can say, Bengal Bank had rupees 20 lakh cash, Bombay Bank had rupees 30 cash, Madras Bank had rupees 10 lakh cash. Suppose that was the scenario. Now you can see individually these banks having low cash facilities, but if they got merged, then 20, 30, 50 and 60. They having 60 lakhs funds. So that's why they merged them. They do not want it to be as a centralized bank. But their competition was not eliminated fully. And even the Britishers were trying to boosting up the Indian infrastructure for their own benefit, like inviting the British nationals, industrialists and businessmen in India. That's why they felt that there should be centralized bank. And then they decided to make Imperial Bank of India as the centralized bank. That was their plan. But there was one thing. Hilton Young Commission was appointed to make recommendation on plan, and they rejected idea of this one. Okay, as I have told you, British government want the Imperial Bank of India to be the centralized bank, but the Hilton Young Commission, which was appointed to study about this idea, rejected the idea. And they said, instead of converting the Imperial Bank of India as a centralized bank, we should appoint another bank. That's why it was the year of 1934 when, on the recommendations of Hilton Young Commission, the Reserve Bank of India was formed after passing of the Reserve Bank of India Act. In 1934, and it was the apex and the supreme authority in the banking system. All right. So now remember one thing. It comes under the Ministry of Finance. But it is the statutory body. Why? Because it is having its own act. Reserve Bank of India Act 1934 established it. Okay. And if we talk about the first governor, then Sir Osborne Smith became the first governor. And here it is very important point. Before converting it into the National Bank of India, National Bank of Independent India, you can say, or centralized bank, we can say. Central Bank of Independent India. It was working as private bank. Okay. So basically it was established in 1934 when the India was under the control of Britishers. And when we got it in the 1947, it was working as a private bank. Later on, it was converted into the centralized bank under the government. Okay. And now the question is, what about the Imperial Bank of India? We know that that bank would become RBI or Reserve Bank of India if the Hilton Young Commission did not reject the idea. But we know they rejected the idea. So what's about the Imperial Bank of India? Where did it go? So nowadays, Imperial Bank of India is known as State Bank of India. Or in short, we could call it SBI. I hope that you people have heard this name before. Okay, so that is the history about the establishment of RBI and the establishment of State Bank of India. Okay, Imperial Bank of India formed by merging the three presidencies banks, Bank of Bengal, Bank of Bombay, Bank of Madras. In 1926, Hilton Young Commission appointed to study the banking structure. The British government wanted to convert the Imperial Bank of India as a centralized bank, which was opposed by the Hilton Young Commission. As a result, the RBI Act 1934 was passed by the government and established the Reserve Bank of India, okay, which is now a statutory body under the Ministry of Finance. And when it was handed over to the Indian government, independent Indian government, it was working as a private bank. Later on, it became a centralized Bank of India. Okay, so students, these are the some points about the RBI or Reserve Bank of India. Okay, in this lecture, we could only discuss these things. In the next lecture, we will cover all the facts related with the topic. Till then, just revise the history which I have told you so that you will find yourself at a better place when you come for the next lecture. Okay, so with this note, let's end this lecture and thank you.